Well, happy Thursday, everybody. I'm Marlon Bowling with you, your tour guide to the ag commodities. So glad you could join us here today. Thursday means it's weekly export sales day, and sure enough, we got the export sales numbers. Let's take a look. What did we have this time around? Well, as we look at the corn, hey, that was a pretty hefty week. 1.36 million tons sold this past week. Soybeans kept up with it. It was 1.38 million tons. They edged out the corn just a little bit. Look at the soy meal sales, 7,300 tons. Soy oil, we had actually just net reductions of 100 tons, so not much going on there. In the wheat, 363,700 tons, and that was down 43% from what we had the previous week. Let's go on and take a look at some of the other numbers like grain sorghum and cotton and rice. Grain sorghum sales, wow, 191,000 tons. We had upland cotton at 186,100 running bales and rice at 65,100 tons. Overall, Brian, if you exclude the wheat, that looks like a pretty good report, doesn't it?
Yeah, it certainly does. Good morning, Marlon. Wheat, not a great number, but very close to what we need to have on a weekly basis to hit the USDA forecast. So I can't say that it's a terrible number by any stretch of the imagination. Mexico was a featured buyer there of products, and Mexico is going to show up a lot along with China in these export numbers. So the corn number was a very strong number, well above what we need to be on the on a weekly basis to hit this USDA forecast. In fact, I don't know, a lot of people have realized that corn sales began the marketing season well behind last year's sales pace, but they've been so strong lately and so poor a year ago at this time that we are now actually 24% above last year's sales pace for corn. So we've found some price levels that'll stimulate demand. That's the job of the market. And, we trade below this $5 level. We are finding some decent buyers of corn. So Mexico was the biggest buyer this week of corn, 30 million bushels. Of course, we had a market year high in soybeans at 50.6 million bushels, and China was the biggest buyer there. They had almost 43 million bushels of that 50 million total. So we talk about how important China is all the time, and that's a real key here, is that they are stepping in and buying soybeans aggressively. We're still behind last year's sales pace, but we are narrowing the gap. And when we talk about unknown destinations that'll show up on our private sales sometimes, and how likely that is to be switched to China, of that 43 million bushels that China bought, about 30 million was switched from that unknown destination over to China. So overall, a very constructive export sales number. Philippines was a huge buyer of meal last week. You mentioned the meal sales were very strong, and we've had some private sales of meal last week to the Philippines. So no surprise that that's showing up on our export sales report this morning.
Any idea on how we're doing on domestic consumption of corn, at least compared to USDA's estimate?
Well, yeah, USDA has been well above the pace that we had been running on most of this marketing season, and we kind of scoffed at them, but they may end up being right, because now we're, like I said, we're running about 24% above last year's sales pace for that demand. And to reach the USDA forecast, we need to average right around 28, maybe 29 bushels per week of corn sales each and every week to hit their forecast. And that is certainly doable, especially when you have a corn sale over 53 million bushels this week. I think the key is to kind of stay at these price levels longer to build that demand base. If we start moving sharply higher, we could lose a lot of that demand. So, it's not hurting us as far as export-wise to stay in this $5 range. Producers are unlikely to be making a lot of sales right now anyway. And plus, you have the crop insurance angle that if we can keep prices at this level, we're probably going to come in around that $4.90 a bushel mark at the end of October when we average the crop insurance prices.
Also, if you look at that grain sorghum export sales number, that kind of dovetails with that big corn number, too. 191,000 tons. Goodness, that was a lot higher than what we had previously. Now, the export shipments were really poor, I believe, on grain sorghum exports. But boy, these sales, I mean, that should help to bolster the corn market, I would think.
It's another demand component, no doubt. When we talk about, we don't hedge a lot of sorghum, but when you talk about it, it is a component of demand for the U.S. corn products. And so the fact that we're exporting some, I think, it is a good sign for our prices here for domestic use as well for corn. We saw a private export sale announcement of soybeans this morning, again to China. This is really already baked into the market already. Back on Tuesday, there was word that China and the U.S. Had met in Des Moines and signed a trade agreement for China to buy an unspecified amount of U.S. soybeans. So we had a sale announcement yesterday, one again this morning. I wouldn't be surprised to see another sale announcement of soybeans to China tomorrow morning. But again, that's part of this pact that was just recently signed.
Yeah, as Brian mentioned, there was a sale of 110,000 tons to China overnight. That was soybeans. They are 4 3/4 higher this morning at 12.93. That's on the November contract. January up 4 3/4 this morning. On the corn, we had that December contract this morning, trading just a penny higher. So not much movement there. In the wheat market in Chicago this morning, on that December contract, we are now 5.5 cents higher. So a little enthusiasm there in the wheat for a change. In Kansas City, we are now 4 1/4 cents higher this morning. And in Minneapolis, the spring wheat trade is showing a gain of 6 cents this morning. We'll be back in a moment, and we'll talk with Brian about our meat exports last week. Were they okay? We'll find out in a moment. Well, we're back with you talking with Brian Hoops of Midwest Market Solutions. And Brian, now let's take a look at the beef and the pork export sales that came out according to USDA. This would be the sales last week. And the beef, well, Shazam, look at that, 21,300 tons if you combine this calendar year and next year together. After last week's very paltry number, that's a nice change. And on the pork, 28,600 tons that were sold this past week. That was actually, the current calendar year was down 8% from what we had a week ago there. So overall, your take on these numbers?
Well, the beef number is one that really stands out as a major improvement from last week. We were looking for some sort of a correction last week to those beef numbers, and I don't know that they ever posted one, but whether it was 400 metric tons or 4,400, this is a huge improvement over that. And, once again, Mexico, China shows up as our best buyers of U.S. beef and pork products. Some of the smaller Asian countries, South Korea, for example, Taiwan, also stepping in and buying some product, and that's who you would normally see at this point in time. But the fact that Mexico likes our pork and China's starting to buy some U.S. beef, I think that's an encouraging sign. It's good to see a rebound in the beef sales, especially because that number was so dreadful last week.
Well, let's take a look at how we closed up yesterday, shall we, on the live cattle board. Our quotes are from Bar Chart, and we finished up very strong, led by the nearby contracts. You had December live cattle up 80 at 179.42. On the feeder cattle market, we closed yesterday with November up $2.62 at 238.05. All of the months beyond that were, way over $1 higher. On the lean hog trade yesterday, strength on the nearby contracts. You had December up $1.12. February was $1.22 higher yesterday. It's now at 70.70. So a pretty strong day yesterday in the livestock trade. Can they keep that momentum this morning, do you think?
Well, I'd love to say yes, and then we can go back and repair some of the damage that was done to the cattle charts in the last week or so. It may be a struggle right on the opening. There isn't much direction out there, but we did post an inside day, which is usually a consolidation type day. We're discount to the cash index in the feeder cattle, so I think if we are led higher, it's going to be led by that feeder cattle contract. And again, we have some gaps much higher than where we're at currently on these charts. I think that'd be a great opportunity to go and fill those gaps that we left here in the next week to 2 weeks.
All righty. Well, thank you, Brian, for talking with us today. Brian Hoops of Midwest Market Solutions in Springfield, Missouri.